Well, it's been a bumpy ride on the JSE as the markets are mixed and emerging currencies retreating from low levels. Stocks have been lackluster since the easing of lockdown restrictions. The bad news, though, is that figures from the Central Energy Fund show that the petrol price for July 2020 could rise by up to R1.59 per litre and diesel by R1.48 per litre in 2 weeks' time. All right, for more on this, we're now joined by Owen Nkomo, Director at Inkunzi Wealth Group. Owen, a pleasure to have you here on SABC News. Thank you very much for joining us.
Thank you for having me, Flo, and it's a pleasure to be here.
Now, is this the end of the low price holiday for fuel? I think we were all quite happy with what we were paying at this point. Will oil, reach that $40 mark soon as anticipated?
The price of oil is already trading above 40. So, it went above 42 a few days ago. I think it will remain very volatile. Because of the demand and supply disjointed nature at the moment. There's a lot of supply out there, but often going to cut the production of oil extensively. We're yet to see that happening actually go into the oil price aggressively enough for the price of oil to sustain a level above $40. But I think for us, certainly will get petrol price increases because the oil price has the lower sort of 20 to above $40 per barrel.
Yeah. When it comes to, the second wave of COVID-19 infections in the country, how would that affect really the economy and our markets really?
It just brings in more uncertainty. So much more uncertainty. Once again, we don't know how to project revenue streams. Don't know how to project the full resumption of the economy. We don't know when people will be back at the offices. And I think the second wave issues more challenges for people who have been able to work because, if the numbers do spike aggressively, like we're seeing them do at the moment, we need to continue to seriously rethink how we will get back as business to full productivity. And obviously that has a direct impact to the country's GDP. And as we have had already, there's a lot of projections that we could fall by anything in the region of 7 to 10% in terms of our productivity as a country because of COVID. I guess most of us this year are just struggling really to survive and make sure by the end of the year we're still alive. Everything else becomes secondary. I just hope that the Ministry of Health, because they've been working hard, they'll be able to contain any aggressive spread of the infection during this aggressive winter flow.
All right, then the rand recovering in the 17s, is this likely to be a sustained trend?
I hope so. It's now below 7. Earlier, trading below $17, which is a good thing because it's a element of inflation that we were starting to worry about when the rand went up 17. Now, rather went about 19, 17 region. I think we are happy with it, and we hope that. The economy, for the right reasons and with the right preparation, the economy can gain, and that will give the rand a little bit more strength. And sentiment around emerging markets that it has started to improve, which is allowing for the rand to continue to strengthen as well. And, I do believe that we need a rand that is better valued than where it has been valued previously. So 17, just to give us a little confidence that we can fight inflation and that's support raw material in preparation for processing those and offshore as well.
All right, Owen, always a pleasure having you here on SABC News. Thank you for giving us your time as usual. Thank you, sir.
Thank you so much.
All right, that's Owen Nkomo, Inkunzi Wealth Group CEO, and we're thanking him, of course, for giving us his input on business news.